Hello, time for a Commodities Corner. Industrial metals, including copper and iron ore, have come under pressure. Investors are worried about ongoing weakness in China's property sector. We've also got this high oil price that could keep central banks raising interest rates, or at least keeping borrowing costs high. Let's get an outlook for coal, both types, met and thermal, and iron ore. Our guest is Reid I'Anson, senior commodity analyst and economist at Kpler, which is a commodities data firm. Great to see you, Reid. Thanks for coming on the show.
Thanks for having me.
We're talking about the China syndrome. Of course, our younger viewers won't remember that movie about a near nuclear meltdown, but you're saying that iron ore and both types of coal are likely to see pressure in the weeks and months ahead.
Yeah, let's focus in on coal first. You know, our view is, we've seen a bit of price appreciation over the past month, but our ultimate view is that the property sector in China remains very weak, right? Starts down 20% year over year, in investment down by more than that even in some sectors. And so it looks weak, right? And that's going to weigh on iron ore, especially when China represents 60% of the total demand. But we have seen a bit of upward price appreciation over the last month, given a little bit of improvement across the manufacturing sector in China. We've also seen a bit of reacceleration across the U.S. property market, and also a lot of strength in India. But our ultimate view is that prices are going to continue to move lower from here. We're more likely to see a price back towards the $100 per ton level versus pushing back towards that $130 per ton level we saw in March of this year.
And is that simply Chinese construction? Is that the problem?
Yeah, that's the biggest driver. Yeah.
Let's move on to thermal coal, because if LNG supplies out of Australia are cut, it could prompt more thermal coal burning to create electricity. But again, you see downward pressure on thermal coal?
Yeah, so similar to iron ore, we've seen price appreciation in thermal coal over the past several months. This is driven by a number of factors: strength in demand in Asia. Like you said, the potential strike action on the LNG side of things helping to pull coal prices higher. But it looks like the industrial issues in Australia are going to be resolved. And we also see demand in Asia starting to come off a little bit. Even on the supply side, we've seen strength in volumes out of places like Australia and Indonesia. Exports this month are up about 3% month over month. That's a big improvement from August, when exports were down by north of 6% month over month. So there's a number of supply and demand factors that are likely going to weigh on prices from here.
And metallurgical coal, I presume any factor reducing Chinese steel production is going to be bad on coking coal too?
Yeah, and met coal has found a bid over the last month because it's kind of followed this industrial story, i.e. people will burn metallurgical coal at points as an input for thermal coal. So it's kind of followed this LNG story, but it's probably going to reattach itself to the weak outlook for Chinese iron ore consumption over the next several months. And so again, we do see a downward trajectory for metallurgical coal.
What about India? India is a huge consumer of met coal. They have a vast steel industry. Not enough, though, to make up the shortfall from China?
Yeah, it's important to keep in mind that, right, like India is 1/4 the size of the Chinese economy, 1/5 the size of the U.S. economy. So yes, Chinese demand matters, but it cannot offset, similar percentage declines in places like China.
Indian demand matters, but it can't offset. Yeah. That's fascinating. What about copper? Do you spend much time on copper, Reid?
Yeah, copper is an interesting one. It falls into this renewable sector. So we do think it's more of a stable bet moving forward. Yes, it's going to come under pressure from issues in China, because just like iron ore, copper, the biggest consumer of copper is China. But keep in mind that you have large government subsidization in the West driving this renewables push. That's going to help to support copper. And then you've also, on the supply side, you have issues, especially in places like Chile. The outlook for production is very unclear. And so we actually are a bit more constructive on our outlook for copper over the next several years.
Do you think we'll see more resource nationalism, to use that phrase, when it comes to copper. For example, Panama, the government's settlement with First Quantum, apparently unpopular with sections of the populace there.
Yeah, I think it's absolutely going to happen, especially with the amount of money on the table. Governments become very interested in how they can nationalize things when there is so much demand and so much potential revenue to be generated. So I think, folks need to build in the expectations that you're going to have a lot of government involvement, especially in Latin America.